Something extraordinary is happening in the financial world right now, and most people have absolutely no idea. While you're watching this video, a metal that has been overlooked for decades is experiencing one of the most explosive price surges in modern history. Because we're talking about silver, the shiny metal that's suddenly creating both panic and euphoria across global markets. The question on every investor's mind right now is simple, yet terrifying. Are we heading for $80 per ounce, and what does this mean for your money, your savings, and the future of the global economy? Let me take you back to the beginning of this year. When 2025 started, silver was trading at a modest $29.50 per ounce. Nothing special, nothing exciting, just another precious metal sitting in the shadow of its glamorous cousin, gold. But then something unprecedented happened. By late December, silver wasn't just climbing anymore, it was rocketing upward like a SpaceX launch, crossing the $77 mark and flirting dangerously with $80. That's not just growth, that's an absolutely staggering 150% increase in less than 12 months. To put this in perspective, silver has delivered the kind of returns that most investors only dream about, completely obliterating the performance of stocks, bonds, and even gold itself. But here's where the story gets really interesting, and frankly, a bit scary. This isn't just about numbers on a chart or traders making quick profits. Something fundamental is breaking in the silver market, and the cracks are starting to show everywhere you look. Manufacturers around the world are genuinely terrified right now. They're watching their production costs skyrocket as silver becomes harder and harder to secure. Some are even facing the nightmare scenario of having to shut down their factories because they simply can't get enough silver to keep their assembly lines running. This isn't speculation or fear-mongering. This is happening right now. In real time, as global supply chains begin to buckle under the pressure of a severe silver shortage, the COMEX, which is the world's largest precious metals exchange where silver futures are traded, is showing signs of what experts are calling backwardation. Now, I know that sounds like complicated financial jargon, but let me explain what this actually means and why it should concern you. Backwardation happens when the immediate price of silver is higher than the future price, which is completely backward from how these markets normally work. It's a red flag that screams supply crisis, and it's making some of the world's most experienced traders extremely nervous. The COMEX has already started raising margin requirements, which is essentially their way of trying to cool down the market and prevent prices from spiraling even further out of control. But the question is, will it work, or are we watching the early stages of a complete market breakdown? Let's dig deeper into what's actually causing this panic, because understanding the fundamentals is crucial if you want to grasp where silver is heading next. For 5 consecutive years now, the global silver market has been in a supply deficit. Think about what that means for a moment. For 5 years straight, the world has been consuming more silver than miners can pull out of the ground. We're not talking about a small imbalance here. The Silver Institute is projecting that the supply shortage will exceed 200 million ounces in 2025 alone. That's 200 million ounces that the world needs, but simply doesn't have. Where is that silver going to come from? The answer is, it's coming from existing stockpiles, from warehouses, from reserves that have been building up over decades. And those stockpiles are disappearing fast. What makes this situation even more dramatic is that silver mine production has been steadily declining. Despite record high prices that should theoretically incentivize more mining, companies are struggling to increase output. New silver mines take years to develop, require massive capital investment, and face increasingly strict environmental regulations. The silver that's easiest to mine has already been extracted. What's left requires deeper drilling, more complex extraction processes, and significantly higher costs. This means that even with silver prices doubling or tripling, we can't just flip a switch and produce more silver overnight. The supply side of the equation is rigid and flexible and unable to respond quickly to soaring demand. Now, let's talk about the other side of this equation, the demand side, because this is where things get truly fascinating. Silver isn't just a pretty metal that sits in jewelry stores or investment vaults. It's one of the most industrially critical materials on the planet, and our modern technological world simply cannot function without it. Every single solar panel that gets installed on rooftops around the world contains silver. The global push toward renewable energy and the fight against climate change is creating unprecedented demand for silver in photovoltaic cells. Electric vehicles, which governments worldwide are pushing as the future of transportation, use significantly more silver than traditional gas-powered cars. We're talking about silver in batteries, in electrical contacts, in charging systems. As the world transitions to electric mobility, silver demand is exploding. But that's not all. The rise of artificial intelligence and the massive data centers required to power AI systems need enormous amounts of silver. Every server, every circuit board, every electronic component in these technological marvels contains silver because of its unmatched electrical conductivity. 5G networks that are being rolled out across the globe require silver. Medical devices that save lives every single day use silver for its antimicrobial properties. From smartphones to smart homes, from industrial machinery to military equipment, silver is absolutely everywhere. The technological revolution we're living through isn't just using silver, it's devouring it at an accelerating rate that nobody fully anticipated. And then there's the investment angle, which is adding jet fuel to an already raging fire. 57% of retail investors, according to recent surveys, now expect silver to trade above $100 per ounce in 2026. Read that again, $100. 1. These aren't wild-eyed speculators throwing darts at a board. These are everyday investors, financial advisors, and market participants who have done their homework and concluded that silver OIS explosive rise is far from over. Some veteran investors are going even further, predicting that we are re-entering what they call a mania phase, where silver could potentially reach $200 or even $300 per ounce. Now, are those predictions realistic? Maybe, maybe not. But the mere fact that serious people with decades of experience are making such bold forecasts tells you something important about the sentiment shift that's happening right now. Famous investors and financial commentators are piling into silver with a conviction we haven't seen in years. Peter Schiff, a well-known economist and precious metals advocate, is warning people, do not wait, and predicting silver will hit $100 in 2026, while gold reaches $5,000. Robert Kiyosaki, author of Rich Dad, Poor Dad, has been aggressively promoting silver as the best short-term investment available, arguing that silver prices will double from current levels based on strong demand and limited supply. These aren't fringe voices anymore. Mainstream financial media outlets like CNBC, Forbes, and MarketWatch are running headlines about silver's remarkable performance and its potential to climb even higher. The narrative is shifting from silver is an interesting speculation to silver is a must-have asset in uncertain times. But let's zoom out for a moment and look at the bigger economic picture, because silver's surge isn't happening in a vacuum. There are massive macroeconomic forces at play here that go far beyond just supply and demand for one particular metal. We're living through a period of extraordinary monetary uncertainty. Central banks around the world have printed trillions upon trillions of dollars, euros, yen, and other currencies over the past several years. This flood of money has to go somewhere, and increasingly investors are looking at precious metals like silver as a hedge against currency debasement and potential inflation. There are serious economists now warning about a potential U.S. dollar crisis, suggesting that the dollar's dominance as the world's reserve currency might be under threat. Whether you believe those warnings or not, the mere possibility is driving investors toward hard assets that have held value for thousands of years. Geopolitical tensions are also playing a role that can't be ignored. We're seeing increasing conflicts, trade wars, and political instability across multiple regions of the world. When uncertainty rises, when trust in governments and financial systems begins to erode, people historically have turned to gold and silver as stores of value that don't depend on any government as promise or any central bank as policy. Silver, in particular, is attractive because it's more affordable than gold for average investors while still offering the same fundamental qualities as a monetary metal with thousands of years of history behind it. Now, before you rush out and put your entire life savings into silver, we need to have an honest conversation about the risks, because they are very real. Markets that go up this fast and this dramatically almost always experience violent corrections. It's just the nature of how markets work. When prices become detached from fundamentals and driven primarily by emotion, euphoria, and fear of missing out, the snapback can be brutal. Some analysts are already warning that silver is exhibiting signs of a classic speculative bubble. The price action has become parabolic, which is a technical term that essentially means unsustainably vertical. History shows us that parabolic moves rarely end well for those who buy at the top. There are also practical considerations that every potential silver investor needs to understand. Unlike stocks that you can buy and sell instantly with a click of a button, physical silver has storage costs, insurance requirements, and liquidity concerns. Silver ETFs and paper silver investments come with their own set of risks, including counterparty risk and the question of whether these financial instruments are actually backed by real physical metal. The spreads between buying and selling prices for physical silver can be significant, especially during times of high volatility. Transaction costs can eat into your returns, particularly if you're trying to trade actively rather than holding for the long term. Moreover, while industrial demand is strong, it's not immune to economic downturns. If the global economy tips into recession, demand for silver in electronics, solar panels, and industrial applications could decline significantly, putting downward pressure on prices regardless of supply constraints. China's economic situation, which has been clouded by real estate problems and slower growth, could impact silver demand, since China is a major consumer of industrial metals. These are the kinds of factors that could derail the bullish narrative, and ignoring them would be foolish. So, are we heading for $80 silver? Well, as I'm recording this, silver is already trading just cents away from that psychological barrier. It seems not like a question of if, but when. The momentum is clearly on the side of higher prices in the short term. But the more important question is what happens after $80. Do we break through and keep climbing toward $100 and beyond? Or do we hit a ceiling and come crashing back down to earth? The honest answer is that nobody knows for certain. Anyone who tells you they can predict exactly where silver will be in 6 months or a year is either lying or delusional. What we can say with confidence is that the fundamental supply-demand dynamics support higher prices over the medium to long term. The structural deficit isn't going away anytime soon. Industrial demand from green energy and technology sectors is likely to continue growing. Investment demand shows no signs of slowing down as long as economic uncertainty persists. But markets are never a straight line up, and there will be volatility, corrections, and moments of sheer panic along the way. If you're considering getting involved in the silver market, whether as an investor, a trader, or simply someone trying to protect wealth, do your homework. Understand what you're buying and why. Don't invest money you can't afford to lose. Don't get caught up in the hype and FOMO that drives people to make emotional decisions they later regret. Consider silver as part of a diversified portfolio, not as an all-or-nothing bet on one particular outcome. Think about your time horizon, whether you're looking for quick profits or long-term wealth preservation. And most importantly, stay informed, because this story is far from over. The silver market is sending us signals that something big is happening. Whether it's the beginning of a historic bull market that will be talked about for decades, or a speculative bubble that will eventually pop and leave latecomers holding the bag, remains to be seen. What we're witnessing right now is financial history in the making. The panic is real, the excitement is real, and the stakes couldn't be higher. The $80 question isn't just about silver anymore. It's about understanding the deeper economic forces reshaping our world, the transition from paper currencies to hard assets, and the fundamental human instinct to seek safety when everything else seems uncertain. So keep your eyes on silver, watch what happens at that $80 level. Pay attention to how governments, central banks, and major institutions respond to this dramatic price movement. Because whatever happens next in the silver market won't just affect precious metals, traders, and investors. It will send ripples through the entire global financial system, impacting currencies, commodity markets, and potentially even the way we think about money itself. This is a story worth following, a moment worth understanding, and possibly an opportunity that comes along once in a generation. But only if you approach it with wisdom, caution, and a clear understanding of both the tremendous potential and the very real risks involved. The silver market is flashing warning signals, opportunity signals, and panic signals all at the same time. How you interpret those signals and what you choose to do about them will depend on your individual circumstances, risk tolerance, and financial goals. But one thing is certain. We are living through an extraordinary moment in silver market history. And whether we're heading for $80 or far beyond, this is a story that's only just beginning.